So we're going to look at some cost accounting systems used by manufacturing businesses. So cost accounting systems, the objective is to accumulate the product costs, accumulate that direct materials, direct labor, and manufacturing overhead. That's the objective of a cost accounting system. Why do we need to know how much our products cost? Well, we need to establish the price, what we sell it for. So if we know that a product costs $100 to build, we probably shouldn't charge $80 for it. And to control operations. So if a product's costing us $80 to build, but we think we could maybe find some efficiencies to maybe make it cost $50 to build, we could see maybe our direct labor is high, or we're incurring too much overhead, or maybe we could save in materials. And then to develop financial statements to be able to show your 3 inventories and properly report your financials. So the 2 main types of cost accounting systems we're going to look at job order cost systems and process cost systems. So a job order system is costs are accumulated by job. So say we're at the Rolls-Royce plant and somebody orders a car. So we have order 1, 2, 3, 4 for a Rolls-Royce. So all the materials, all the labor, and all the overhead spent building that one car get bundled together in one bucket, and we accumulate them by job. So that's why for Rolls-Royce, job order is appropriate. Custom products, large variety of products. We could separate things pretty easy. In service firms, it's typically pretty popular too, because you're allocating typically labor into one bucket. So you can have people record their time to specific projects. You're not trying to divide up materials. Where a process costs are accumulated by department or process. So if you're manufacturing a lot of stuff, things aren't real specific. Process costing is more appropriate. So remember our job order costing, where we build that one Rolls-Royce and we develop the labor, the overhead, and the materials to that job as it's needed. Well, let's just say we're a company that processes birdhouses and we produce 10,000 of them a day. It would be hard to allocate cost by birdhouse as they go through because there's 10,000 of them. So process costing might be more appropriate because costs are accumulated by department or process. So we'd have cost for the cutting department, cost for the assembly department, cost for the gluing department, cost for the painting department, instead of each individual birdhouse going through. So typically costs for products that are not distinguishable from each other in a continuous production process. So if we're continuously pumping out 10,000 birdhouses a day, they're not distinguishable from each other, so it'd be better to use process costing. If we're manufacturing Rolls-Royces where we don't build that many of them, it's not continuous and they're unique, yeah, we could do a job order system. So here's a job order cost system for Quixote guitars. So we get materials inventory from the materials storeroom. So we're going to build 2 guitars. We have job number 71 and job number 72. For job number 71, we go get the wood and materials we need out of the storeroom. For job number 72, we go get the materials we need out of the storeroom. And then for labor and overhead, we track how much labor we put into building each guitar separately. Then in our finished goods inventory, we add up all the costs for each specific guitar. So job 70, the materials plus the labor plus the overhead that went into building that specific guitar is in our finished goods inventory. And then it goes to the music store, it's sold, and that's cost of goods sold. So each specific guitar is tracked separately for the materials, the labor, and the overhead that went into building it. So let's just take a look at materials. So say we bought some materials on credit. So we went and bought some wood. So we increase our asset materials and increase our accounts payable liability because we have to pay in the future for those materials. So here's a simple example of cost flows for materials. So we have an invoice from the supplier. Then we have what's called a receiving report, showing that we received the 750 number 8 wood maple we were supposed to. And then we have what's called a materials requisition. And then, which a materials requisition is how many items that we need. So we need 200 number 8 wood maples for requisition 672, job 71. So we're going to use 200 number 8 wood maples. And then job cost sheets, we add up, we put the materials that we use. So you see job number 71, it was started, we had $3,000 of a beginning balance, and then we used $2,000 of materials. If you look at job number 72, we're going to use $11,000 worth of supplies, because if you go up, we're going to use 400 number 8 maples at $10, 500 number 8 maples at $14 to get us $11,000 of materials that we use for job number 72 to build that guitar. So our direct materials is $11,000 on job 72 to build 60 guitars. And then our materials is $2,000 on job 71 to build 20 jazz guitars. So requisitioning materials means that we're taking the materials from the storeroom into production to use. So our entry to record this is we're going to reduce our raw materials inventory by $13,000 and increase our work in process inventory by $13,000. So they go from being raw materials to being work in process because we're going to start to use them. Now let's look at direct labor. So we record our time to each project. So we look at job number 71 on the left. We recorded 4 hours, then we recorded 2 hours. So our labor cost came out to $60. So what we do is we add up all the timesheets. So that was just one employee for $60. We add up all the timesheets of all the employees that worked. So for job 71, it cost us $3,500 in labor. We do the same thing for job 72. We add up all of our time tickets of people adding up all their time and what they cost, and we get our direct labor of $7,500. So we add that to our balances before, which was our direct materials we looked at before of $2,000 and $11,000. We add direct labor from the timesheets, $3,500 and $7,500, and we're accumulating our cost for each job. So there's two primary objectives of timesheets. The amount to pay each employee for the pay period, obviously. And then we can allocate their labor to individual job orders. So that way if they're working on job 71, we can record their direct labor on job 71. If they're working on job 72, we can record their labor to job 72. So we can actually report the cost of each job. So our entry to record our labor is when people do work for us, we're going to increase our liability wages payable because we're assuming we haven't given them their paycheck yet. So it's wages payable, we owe them their money. And then we increase our work in process by the direct labor they're spending on the jobs. So factory overhead is manufacturing costs other than materials and labor. Direct materials and direct labor. So various sources are depreciation, our indirect materials, indirect labor, factory utilities. These are all factory overhead costs. So to record our factory overhead, we're going to reduce materials by $500 for our indirect materials. We're going to record our accumulated depreciation of $1,200. Our wages payable at $2,000, which was indirect labor, and our utilities payable at $900, which is factory utilities. And then we're going to increase our factory overhead account in our asset side. So you can see that the entry is our assets equals liabilities plus equity. So we add up the materials, the depreciation, the wages payable, the utilities payable, That's how we get to the $4,600 factory overhead number. So now we have that big factory overhead number. How do we allocate factory overhead to jobs? How do we allocate the utilities expense, for instance, to jobs? Well, we have to allocate it through cost allocation. So the measure used to allocate it is called an activity base. So it could be something of consumption. So it could be direct labor hours. So if job 71 has 20 direct labor hours and job 72 has 80 direct labor hours, that means there's 100 hours total. So the first job has 20% of the labor, second job has 80% of the labor, so they would get 20 and 80% of the overhead respectively. So we have to first step though is to come up with the activity base. So it could also be machine hours, direct material dollars. It could really be anything as long as it makes sense.